Good evening, folks. This is Andy Pedraza with Special Effects Academy. We're on the start of the week session for the Forex Trading Room on November 29th of 2020. Hope everybody in the U.S. had a great Thanksgiving Day weekend, long holiday, got a lot of your shopping done, and in general enjoyed yourselves as much as possible in this year of the plague. Let's kick off our show for this Sunday. We're going to go through our standard agenda. We'll be looking at the prior week's results, our currency strength meter, fundamental announcements on the calendar, a look at the major pairs on the daily charts, any setups we see in progress, and a few words in conclusion. Starting off with the ledgers, slight 2 or 3% drawdown on the long-term ledger on closed trades. We still have 4 trades open. 2 of them are showing losses right now. Kiwi dollar is at a high level of profit, and Euro New Zealand is essentially at break even. The 2 losers right now are the pound pairs. There is heightened concern on the results of the Brexit deliberations, which are pretty much going into their final lap right now. So there will be higher volatility on the pound between now and whenever they announce some sort of deal or throw the towel in and decide there isn't one. There is, of course, a risk in those trades if there is no deal, or worse, a very bad deal. The pound is pretty much guaranteed to suffer. But I think the upside on those trades at this point in time is far larger than any downside. So I'm going to be sticking to those trades for the duration. We'll see what happens with them. But again, in trading, no risk, no gain. On the intermediate term ledger, basically flat. Where the difference between this week and last week are tenths of a percent. So nothing much going on. We do have one trade open at this point in time, a USD JPY short, which is showing profit. I will be opening up more trades on this account as the week begins, so stay tuned for that. But for now, I'm just going to monitor the market for the first 24 hours. And the short-term ledger, a very slight gain, less than a percentage point, but still a gain is a gain. And we'll see what we can do this week to improve that. Notes and opportunities for improvement. The Biden transition is initiating in the U.S. The Trump administration has finally agreed to start giving information to the Biden team, though there is still a lot of talk about fraud and stolen election and this, that, and the other. So we're not out of the woods yet. There's no telling what will happen between now and the Electoral College vote next month, December, or the inauguration scheduled for January 20th. So this is still up for grabs as far as I'm concerned. The dollar slide continues, and most of the dollar crosses, and we'll look at those charts when we get to that point in the presentation, are at breakout points or indeed have already broken out. A third COVID vaccine was announced out of England, and immediately they're announcing a lack of proper data or procedures. So that third vaccine is a little bit up in the air right now. The other 2 vaccines, which again is not that I trust them all that much, but they seem to be in the 95% effective rate, which is a little bit lower than the survival rate of 99.97%. But what do I know? U.S. stock markets at all-time highs yet again. So every week we seem to be making a new high on the Dow and the NASDAQ. This week was no exception. As I always tell people, whenever everybody is piling into the market and they think that it can't go down, that is when you should be ready for the crash to end all crashes. So we're at that brink again. Commodities such as oil, silver, gold, very likely to continue to overperform, though this last week was not good for gold or silver. Oil, however, did break out, and we'll take a look at that when we look at the charts. The relative strength meter, our first comparison here chart, if I may direct your attention to the rightmost columns, monthly and weekly, we can see that silver suffered a 6% drawdown this last week, bringing the monthly percentage gain loss to 3.70 negative. Gold was also significantly down last week to 4.5%, and essentially that is the deficit for the month, 4.80%. The bigger movers were the Australian pairs and the Kiwi dollar as well. The Kiwi dollar indeed breaking out, the Kiwi breaking out against the dollar. It's up more than 6% for the month, becoming the biggest mover. And we've been trading that one since the beginning of that move. But I would still urge you to look at the Aussie pairs. Some of them are showing a lot of movement in the last week and in the last month, almost rivaling the Kiwi dollar move. Fundamental announcements scheduled for the week. We've got the interest rate out of Australia coming out tomorrow night. So we will be starting our evening session later than usual to accommodate for that. Check your emails for the exact schedule. And of course, we have Jobs Friday, December 4th. We will get the non-farm payroll out of the US and the Canadian change in employment at the same time, 8:30 a.m., also to be live traded. There is a testimony from Fed Chair Powell on Tuesday in the Senate or Congress or whatever. We're not going to be trading that one live. That's probably going to go on for hours. It's just not worth it to hang on to whatever happens there. But I would still urge everybody to be very careful on the dollar pairs that day. Same goes for that evening. We've got a speech from the Reserve Bank of Australia's governor that's happening at 7 p.m., so a little bit before our evening session. Not going to be traded live either, but also be careful with the Australian pairs at that point in time. Now we go into the charts. Commodities, as I had mentioned, oil finally broke out of its sideways range, finally got above 45 and ended the week above 45. So eagerly waiting to see what it does as the new week begins. But we have our first breakout in, well, forever. The last time it was this high was before the collapse back in March when the COVID panic hit. Major pairs, looking at the currency, euro dollar, of course, one of the breakout pairs. We've got that breakout ongoing. We'll have to see if it continues as the week begins. But it's already at its highest point, or closed rather, at its highest point in the history of this daily chart, which goes back to February of this year. So this was the highest close in that period. Pound dollar tried to do the same thing, didn't quite manage it. And again, this is mostly as a result of the fears of a bad Brexit deal. Otherwise, the pound dollar would also be breaking out at this point. On the plus side, if we do get some sort of good news out of the Brexit negotiations, this thing is going to skyrocket. So stay tuned to the pound dollar for further news. USD/JPY not yet breaking out, but very close to it. So we have our lowest price. Well, it's not the lowest price, but it's below support. We had a lower price about a week ago, and then maybe 2 or 3 weeks back, but it's angling to break those yet again. And as I always tell people, I am extremely confident in the yen going down all the way to 100 yen per dollar. So that is almost a given in the climate we're undergoing right now with the uncertainty with the dollar, which promises to get worse. So there is about 400 pips there to be had easily on that movement. It will probably slow down when it gets to 100. I don't think it'll go much deeper than that, but you never know. Depends how bad the situation here in the US will get. Moving on to the USD CAD, another one on the brink of breaking out. It's at its lowest price, also in the history of the chart since February of this year. There is much lower it can go if we move out to a weekly chart, but it is poised to do a breakout as early as this week. USD Swiss, same thing, breaking support yet again. It has one lower low to beat, and then it will be in a free fall. And this is the lowest I've seen the USD Swiss in years. So we're probably going to have a very interesting ride if we get that break of support and it keeps going. Aussie dollar breaking out at the top, another one that's right at the previous high. And this week we'll probably have it shoot far beyond. So stay tuned to all the dollar pairs. And last but not least, the Kiwi dollar, the biggest breakout so far. It broke out weeks ago and has not stopped since. We've been tracking this one since it broke resistance. At that point, it was the highest resistance at the 67.25. It is now almost 300 pips higher than that in just 2 or 3 weeks. So this has been a very good profit maker, and well, we'll continue tracking it as long as it keeps moving in our direction. That's it for the dollar pairs. Aussie CAD at the top of the chart. Not sure if it's going to have the strength to break out above or will continue tracking sideways. Maybe this week we'll find out. Euro Swiss, pretty much have this pair on ignore the pip distances of these movements. They look big on the screen, but they're really small, 100 to 150 pips, maybe 200 at the widest. And they go sideways for a long, long time. So really not the best subject for our attention. We'll be back to trading the Euro Swiss eventually, but now is probably not the time. Euro pound, we were trading this one down and got stopped out last week as it made that big move all the way back up to the trend line. And again, this is on the fears of a bad Brexit outcome for the UK. What it does give us is a great opportunity to trade it back down and well beyond support if we have any sort of good news coming out of the UK or the European Union as regards to Brexit deals. And this may come out as early as, well, today. It could be any time this week that we get some sort of outcome. Euro JPY, very strong movements in both directions, so not an easy pair to trade right now. We're waiting on it to pick a direction and stick with it. It's been mostly sideways for quite a while now. Euro Canadian, same thing. It's toying right above support, but has been sideways for a long time now, and we're waiting for that breakout in either direction. Pound JPY, another one that backtracked late last week on these heightened fears of the bad Brexit outcome, went all the way back to the trend line. This is one of our open trades on the long-term account, which is showing a negative right now, about 100 pips. And well, again, I'm going to be holding on to those trades because I think the odds of it working out are better than their opposite. And Aussie JPY, I'm sorry, I thought I was going to pound Aussie, but we still got a while to get to that chart. Aussie JPY at support resistance and mostly sideways. So another one where we're waiting to see whether the Aussie or the yen are going to gain the upper hand. Euro New Zealand breaking out at the bottom, open trade on the long term, pretty much at break even right now. We're waiting for that breakout from the bottom of the chart, which is going to be good for, at this point, at least 300 pips. But the way this pair moves might be as much as 1,000, and it might be a very short period of time before it does that. If you look at the chart, it made 1,000 pips between October and today. So basically, a couple of months, it dropped 1,000 pips. So that's how fast this pair moves. The ATR, as we can see, is giving us 140 pips a day on average true range. So this is one of the bigger movers in our entire portfolio of currency pairs. Pound Canadian up, up, up and away for weeks, and then hit the Brexit fears last week and collapsed, went back into its previous sideways range. Actually, a very, very big move for a single day. It moved in, I'm going to say, in excess of almost 200 pips there. Might have been even more than 200, but quite a strong move for a single day. We were not trading this one, thankfully. We would have been caught in that. Absolutely. It had been bullish for weeks now. So, cautionary tale. Be careful of these pound pairs until we get a final Brexit determination. Pound Swiss hitting resistance and bouncing off again on Brexit fears, but still in its sideways channel. So, not the biggest mover. And last but not least, the pound Aussie going all the way back to the bottom of the Ichimoku cloud again on the Brexit fears. This is our other pound open trade on the long-term account, and we have a pretty wide stop loss on this one, and that's for a reason. We expected something like this might happen, but I'm still cautiously bullish on the pound until we get that final Brexit decision. That's it for the charts. Setups in progress on the pound pairs. Of course, the Brexit deadline is the only thing that matters right now. In the dollar pairs, the U.S. election fallout is the only thing that matters right now. New Zealand, the Kiwi is very, very strong. I'm not really sure what's driving the Kiwi strength other than, hey, we're not the dollar, we're not the pound, we're none of these other countries with all the issues. So the Kiwi has been shining now for quite a while, and it doesn't look like it's stopping. Pair that with the dollar weakness, and you have your explanation on why this is the biggest breakout in all the dollar pairs. The Swiss pairs, they are nearing, the Swiss is nearing a breakout with the US dollar, but it's also poised on several other crosses to move into Swiss strength. Again, it is a safe haven currency, so it tends to shine in times of unrest. And the euro pairs, the euro, of course, breaking out against the dollar, and the sharp recovery we saw against the pound on the back of the Brexit fears. That one might be very easily reversed if we have any sort of good news. And that's it. My final words here before we call it a night. My words of wisdom here: shy away from the big win strategies and the gurus promising the same. Regretfully, many people, newcomers, beginners, they view the market as a place to score a big win or three or however many they can. And it's not that it can't be done. I've done it myself out of pure dumb luck. When I started out, I had a huge win. But if that's your goal, you're going to be very, very unpleasantly surprised. You cannot plan for the big wins. They come as a bonus when you're doing your trading right. Your goal should be to make steady gains and compound them over a longer period of time. And if you do this, if you're there, if you're trading, the big wins are going to be coming to you now and then, but they will not be predictable, and you cannot count on them. You cannot make your plans for next year based on that big win that's going to happen in a few months, because it may not happen. You can instead track your steady gains and your compounding, and you'll get a pretty good idea of where you're going to be in 5 years' time, especially if you have a couple of big wins along the way to speed you on that path. So those big wins are going to be your bonus, but should never be your target. I see a lot of people giving up in trading, and they're usually pretty decent traders, but they're always looking for that big win. And when it doesn't come, at some point, they quit. Don't be like them. Go for the steady gains, go for the compounding, and the big wins. I promise you, you'll have enough of them throughout your trading career to make it worth your while. That's going to be it for me this evening. Do I have any comments or questions from anyone? Okay, folks, thank you for being with us. I'll be sending out an update to our subscribers very shortly. Everybody else can catch this session on the YouTube. And of course, I will see my tribe, my people tomorrow when we start trading live again for the week. Have a great rest of a weekend, and hey, happiness, and talk to you tomorrow.